Stop for 1 second. Before you scroll away, before you assume this is another crypto warning video, listen carefully. If you've ever felt like you almost had it right in crypto, if you've ever been correct about direction but still lost money, this video is about you. And before we go any further, if you want real crypto content without hype, without fake promises, and without pretending losses don't exist, subscribe now. This channel is built for people who want to last, not gamble. Here's the uncomfortable truth. Most people don't lose money in crypto because they picked the wrong coin. They don't lose because of bad timing. They don't even lose because of volatility. They lose because of one invisible mistake that feels logical in the moment, but destroys accounts over time. And the scary part? Almost everyone makes it. Crypto doesn't punish ignorance first. It punishes confidence without structure. At the beginning, everything feels exciting. Charts move fast. Opportunities seem endless. Every dip looks like a chance. And that's when the mistake sneaks in. You stop thinking in probabilities and start thinking in stories. This coin has strong fundamentals. This project will recover. The market is just shaking people out. Sound familiar? That's not analysis. That's emotional justification. And don't worry, this isn't a moral lecture. This is psychology. Human psychology hasn't evolved for open, 24/7 hypervolatile markets. Your brain wants certainty. Crypto offers chaos. So your brain fills the gap. Here's where things get dangerous. Instead of asking, what invalidates my trade? Most people ask, how long until I'm right? That single shift changes everything, because now, instead of managing risk, you're managing hope. Quick humor break, but painfully accurate. Hope has wiped out more crypto wallets than any hack ever did. The market doesn't care about your conviction. It only reacts to liquidity, positioning, and behavior. And this is where most traders unknowingly step into the trap. They hold losing positions longer than planned, cut winning trades too early, and call it being patient. Patience without rules is just delayed damage. Real traders don't rely on feelings. They rely on predefined decisions. If X happens, I'm out. No debate. No second guessing. But most people don't do that. They enter trades emotionally and manage them mentally. And the mind is the worst place to manage risk. If this is hitting a little too close to home, leave a comment. Not for the algorithm, for awareness. Awareness is the first real edge. Another layer of this mistake is identity. People don't just hold positions. They become their positions. I'm bullish. I'm a long-term holder. I believe in this project. Belief is powerful. In religion, in sports, in life, in markets, belief is expensive. The moment your identity is tied to a trade, objectivity disappears. Now exiting isn't a decision. It feels like admitting failure. So you wait, and rationalize. Crypto doesn't destroy you in one move. It erodes you slowly. Small losses ignored, small mistakes repeated. Until one day you check the account and think, how did this happen? It didn't happen suddenly. It happened consistently. Halfway through this video, here's something important. If you don't have clear exit rules before entering a trade, you are not trading. You are reacting. And reacting in crypto is like trying to swim during a storm by guessing where the waves will go. If this kind of breakdown is useful to you, subscribe now. Every video here builds on the last. No fluff, no noise. Now here's the part most people don't want to hear. Winning in crypto is not about being right more often. It's about being wrong cheaply. Professionals lose all the time. They just don't lose big. Beginners want to be right. Professionals want to survive. And survival is boring. No dopamine spikes, no hero trades, just rules, execution, consistency. Crypto rewards the people who can control themselves. When everything around them screams, do something. We're going deeper into why the brain resists exits, how the market exploits that weakness, and how to fix it without becoming robotic or emotionless. If you're still here, it means this isn't just theory for you, it's experience. And if you haven't subscribed yet, do it now. This channel exists to help you last in crypto, not to chase the next shiny thing. Let's go one level deeper, because the invisible mistake doesn't stop at bad exits. There's another layer most people never notice. The market trains you to associate activity with control. If you're doing something, you feel in charge. If you're not, you feel exposed. So traders overmanage. They move stops. They resize positions mid-trade. They interfere, and every interference feels smart in the moment. I'm adapting. I'm being flexible. I'm reading the market. What's actually happening is fear wearing a professional outfit. Here's the paradox. The more you interfere emotionally, the less control you have. Markets reward pre-commitment, not improvisation. Think about it like this. You don't decide to wear a seatbelt after the crash starts. You do it before you drive. Risk management works the same way. Another quiet killer is time distortion. When a trade is green, time moves fast. When it's red, time slows down. 5 minutes in profit feels like nothing. 5 minutes in loss feels eternal. So people hold losers longer than winners, then tell themselves they're being rational. They're not. They're negotiating with discomfort. Quick humor moment. Crypto traders can hold a losing trade for weeks, but can't hold a winning one for 5 minutes without sweating. That's not market skill. That's emotional imbalance. Here's something most people don't realize. The market doesn't need to trick you. You trick yourself. It gives you freedom. You misuse it. No rules on when to exit. No limits on exposure. No plan for when you're wrong. Freedom without structure feels empowering until it becomes expensive. Halfway through this, let me be very clear. If you don't know exactly how much you're willing to lose before entering, you've already lost control. That number isn't pessimism, it's protection. If this sentence alone is changing how you think, pause the video, like it, and subscribe. This is the foundation most people skip. Now let's talk about consistency. People obsess over strategy, indicators, setups, but consistency doesn't come from setups. It comes from behavior. Two traders can use the same strategy. One survives, one blows up. The difference isn't intelligence, it's emotional repetition. Doing the right thing even when it feels boring. Doing the same thing even when it feels pointless. Stopping when your edge disappears. Crypto punishes ego fast, and it punishes revenge even faster. One loss turns into two. Two turn into just one more trade. And suddenly, you're trading to feel better, not to execute well. That's the moment the account stops being a tool and becomes an emotional outlet. Markets are ruthless with that behavior. They don't care if you're tired. They don't care if you almost recovered. They don't care about your last win. They only care about what you do now. Here's the uncomfortable truth most people avoid. You don't need more confidence in crypto. You need less emotional attachment. Confidence makes you press harder. Detachment makes you survive longer. And survival is underrated. The traders you admire didn't win because they were fearless. They won because they respected risk more than excitement. They didn't try to be heroes. They tried to stay in the game. And that's the real shift. When you stop asking, how much can I make? And start asking, how do I not destroy myself? Everything changes. If this video helped you see crypto differently, leave a comment. Say what mistake you recognize the most. And subscribe. Because this channel is about clarity, not chaos. Crypto isn't about being right once. It's about being disciplined repeatedly. And the invisible mistake disappears the moment you choose structure over emotion.